Morning, everyone. Welcome to this morning's edition of MPC Markets Morning Call, 4th of September 2025. Google played superhero last night as they got a very positive antitrust ruling from handed down and essentially which prevents now the potential breakup of and split off of Chrome. So Perplexity, which is one of the AI programs we use, or I use quite often, it's kind of replaced Chrome for me. Actually put in a $27 billion bid for Chrome because they may have been forced to split it off overall. But the most damaging proposals was the forced sale of Chrome and then a ban on browser payments. So it was rejected. They avoid the breakup, preserve their ability to pay billions to browsers like Apple for default search placement, and eliminating payments that would have increased. Eliminating those payments would have increased, or does increase Google's profits significantly. So, but essentially, as you can see there, Apple was up nearly 4%, Google was up nearly 9%. Quite a few of the analysts were very quick to say that Google is now the cheapest of the Mag 7 now that this is out of the way. And essentially this regulatory lack of clarity is behind them. With these things, I would assume there'll be some form of contesting at some stage. Seems to be, the lawyers always find a way to get paid. So I don't think this will be the last we see of this. But look, as well, I think different jurisdictions may have different rulings as well. So, but yeah, look, I think, breaking off Chrome would essentially have been, a much harder option, and it would have caused a lot of disarray and broken up Google's business model. But overall, I do see that, they're, as much as they talk about, Gemini being the most used AI here at the moment, I think it's more so that Chrome's just the default browser and Gemini gets used at the top of that. I think more people like myself are moving to Perplexity and like sort of programs, but even even on my phone, I just don't even bother anymore. Just ask the question you want to know the answer to. It comes up. It's got a bunch of references. Then you skip all the ads essentially. So highly recommend it if people want to have a look at it. There is a free version and there's a pro version as well. Very good for financials of late as well, because I think they've done a deal with FactSet, etc. So that really is starting to eat into some of Google's surge. But look, the Apple crowd, which are essentially, on 10 years ago's technology, they won't be switching browsers. They're creatures of habit and they won't change. That's why Apple's been able to just release a new processor, a new camera for near on a decade straight and still manage to sell as many iPhones as they have. So yeah, whereas I think you sort of more your younger users or your Android users will probably are gravitating away from from Google at the moment. But it'll be interesting to see how they go and how they adapt. They've had a couple of really bad false starts on a few things, particularly their AI, and it'll be. I think they'll start to play catch up now that this is behind them, because they can obviously plan knowing that they've got the the Chrome search coming through. But there was something interesting from Sam Altman, from OpenAI and GPT was apparently GPT's recording absolutely everything in every conversation, which doesn't surprise me in the slightest. But there was a bit of outrage about that on social media last night. Look, if you think that you're not being tracked on just about everything on your phone and on your PC, you're probably a little bit naive. So it doesn't particularly bother us, but or me in particular. But but there is a surge in demand for browsers like Brave, which are which have a much higher privacy rules for users as well. So look, they're still the dominant force with Chrome. and even Microsoft's tried to take them down, and they just can't. So it just is what it is. We had a bit of a wobble yesterday in the Aussie market. We were down 1.8%. I think it's worst day since Liberation Day, sort of region or space of time. Back in April, basically, and it was led by the banks. The banks were pretty heavy, and I think that's a reflection of index selling. So, as much as I constantly get asked whenever I do media, what do you think of CBA? What do you think of CBA? And every single time I've responded, it's overvalued, and then I get the follow up question is, well, why is it up here? And it's what. Jonathan Takadena and I have had, really lengthy discussions and done a fair bit of research into what they call, is coined the mindless green robot. So all of that passive money that goes in there for super, which is near 12 cents, 12% of everyone's wages goes into super. And then if you're in a passive ETF, then 12 cents of that is going to go into the likes of CBA. They don't tend to pick cyclicals like mining stocks and to have those large positions. And then when money flows into Australia, from offshore countries, from offshore funds, they quite often will park it in CBA or the big four banks because they're very reliable and tight businesses with very strict regulatory requirements around them in terms of capital ratios, etc. But, you might be, they're definitely going to survive. If they survived very well in the GFC. I was a credit spread trader in the GFC, and the four pillars policy, or the big four banks, as much as we all whinge about it, pretty much saved our economy from absolute ruin. So it's one of those necessary evils sort of thing. But that turnaround and that selling in the banks yesterday is a real mark of probably some outflows to those passive funds, just generally. Been really surprised to hear. Normally, when it comes around to September, I'm the only one banging on about September to October weakness and it being a risk period. I'm certainly not on my own at the moment. The financial pundits it's on repeat it as it stands. And the moment we step over the line in October, I'm sure we'll be talking about the Santa Claus rally, which everyone loves to bandy those phrases around. Sell in May, blah blah blah. So yeah, look, it's I think the market's general awareness of this September weakness, and I'm talking, not just in Australian press, but it's been talked about on Bloomberg quite, and in the US Bloomberg quite a bit, and even in in the European press as well. So when those sorts of, when everyone's flagged it generally, it doesn't tend to play out very well. So I'm a little bit skeptical. I still maintain that this payrolls number will be the absolute key number on Friday night. We're expecting 73,000, which is a very low number, by the way. I think you've got to keep, it's about 120 or 110,000 just to keep up with migration. So that's effectively a negative number. So yeah, but we're starting to see technicals turn here in Asia. Until that Google ruling rescued the market, I mean, these daily gains here were essentially null and they were moot. So I would expect that the buzz to probably, or the shine to wear off that over the coming days, because as you can see here on this market map, it's not a lot of other green. I mean, mainly these are consumer defensive here, and this is consumer not durables. It's they're fairly defensive sectors overall. It really was, all the heavy lifting was done by Apple and Google, so I don't really expect this thing to, as you can see there, the Russell 2000, which is the small caps index, was actually down on the day, as was the Dow, and then Google and Apple would make up a huge percentage of these two here, the S&P and the Nasdaq. But technicals turning throughout Asia. It's still only just a buy through or neutral through here on the daily technicals, which is significant. Weakening from like 3 odd weeks ago. Everything was just every single technical indicator out of like 20 indicators was all at strong buy, except for RSI, which was saying overbought, but it was overbought for over a month. And in momentum markets, you don't want to use a pivot indicator like that. So Salesforce reported earnings overnight as well. Was disappointing, I do like looking at Salesforce because I think it's a really good bellwether for how AI is actually being commercialized. These guys are way ahead of the game. It's so expensive. We looked into it here. It ain't cheap, but some of the functionality is incredible, and it really does mean that your sales team doesn't have to be particularly talented or have much of a work ethic, because it prompts it effectively the only thing it doesn't do is call the client or the lead. So, but it's a really good bellwether because they're spending a lot on this agentic AI, agentic AI is modules that are basically set up that mainly for repetitive tasks, where it'll actually just go and automatically do it for you. I've tested a few here and there. They're not there yet as it stands at the moment. But I'll continue to test because this thing's moving so fast that it could be 2 months, and it could. But things like the morning report that I do every morning, I get Grok or Perplexity to scrape trending topics and things like that for me, but then I collate it all into this morning podcast and the morning report. But yeah, these guys are leaders in it, and ServiceNow is also leaders in it as well. But they're getting not criticised for their R&D, but they're down 5% because, as you can see here, cost of revenue and operating expenses and R&D, it's like 14% of revenue. And then they've got all their costs, like this net profits. It's thin, 18% margin, and look, it's the price of being first. And realistically, they've had a lot of clients. They forecast their third quarter revenue below Wall Street estimates, and clients are dialing back spending on enterprise cloud products due to macroeconomic uncertainty. And enterprises are postponing their large IT spends due to weakening global economy amid macro and geopolitical issues. So this is what I mean about AI is where people are spending, have got their top priority for spending at the moment, particularly from an efficiency standpoint. I mean, if you can hire, these guys fired 4,000 people because their own AI actually replaced 4,000 people in their organization. Computers don't, AI doesn't ask for a pay rise. So, and you don't have to have a HR department, and they do their job unquestioned. So look, there is definitely efficiencies, and that's where I think the first phase of revenue, it won't be revenue necessarily from AI, it will be the cost savings at a board level, where people can do efficiencies. That will have its problems within itself, don't get me wrong. But but these guys are spending, but then they're really at the cold face here of AI spending that's why I brought this example in, because them and ServiceNow essentially are probably the best examples of leaders in the actual AI software space, and sort of have that first mover advantage. But they're spending a lot of money to get there, and that it's an interesting comment to see that their demand was weakening a little bit. We got Broadcom. Lululemon actually reported after the bell today. I'm not entirely sure what it was a little bit after. It was a little bit late overall. I'm just having a quick look now. Look, it was obviously they just met expectations because they're only up about 0.7 in the aftermarket. So Broadcom will be pretty big tomorrow. RBA governor speaks tonight. And I think it's around about 6 p.m. But as I said, the big show's payrolls. We're expecting 4.3% unemployment rate, which is up 0.1, which is still, any economist pre-2010 would regard that as, a reason to tighten, not ease rates. but the anywhere below 4.5% used to be regarded as perfect employment. Anything below that really was regarded as being a disadvantage to the employer. And inflationary. But that non-farm payrolls is the big show, really. And I think that will determine what happens broadly for the rest of the month. If it's a weak number, we could get hit on economic fears. We could also turn around and go, we're going to get a heap more rate cuts. Like, the market's a little bit strange sometimes. If it's a strong number, that takes rate cuts off the table, and yields might head higher, which could be a little bit damaging as well. But it'll be be interesting to see if it's around about expected or a little bit disappointing. That's probably going to prompt the rate cut calls. That might be positive because it's not a disaster. But a negative number, we haven't had a negative number since December 2020. A negative number would probably be a bit of a disaster for the stock market overall, and we'd probably start to see some heavy selling, I would imagine. But yeah, it will be interesting to see the price action on Friday, and on Monday morning I'll go through a 10 or 15 minute chart and just show you and just run you through what the price action looked like on the evening and where the volume traded. Commodities, gold and silver still doing pretty well, holding in there. Which, look, it was the silver's found a new bit of resistance there at 42. It'll be interesting to see if it can get through that. Platinum's played a little bit of catch up this week. It was only up about 3%, but up 2% overnight. Those precious metals really getting quite a bit of demand. We've been on the precious metals wagon for quite some time now, probably 18 months in gold miners. We've been long physical silver. We've had a structured investment that was leveraged 10 to 1, which expires at the end of this month, where we've essentially made over 200% return on equity on that. We are, if anyone's got any interest, we are going for another 12 months in the gold miners and the silver price. So 12 months and very capital light, but you'll have to check out our socials to read the investment PDF. It's for wholesale only, but not much really going on outside of that. Uranium's still quite well bid. It's really mainly the US. The poor Australian uranium market just can't win a trick at the moment. I would expect a lot to, the last time we had this much positivity and uranium ETFs globally were up here, Paladin was like 120% higher and Boss was probably 300% higher. So just that dour outlook on nuclear in Australia for some reason. So, look, if you want to have a look at that hyperscaling AI webinar I did earlier in the week on, I believe it was on Tuesday. It's on demand now. Just check out our socials. You get a free investment PDF as well, and you can have a read through that. And it's about 45 minutes long. It's all about the next phase. And having said that, there's a few recommendations in there. Probably wouldn't do them in September. I'd probably wait, but you can add them to your watch list or your shopping list moving forward as things to have a look at to buy overall. But so Aussie market today, I would expect to bounce back a little bit. I think the futures are up about 0.35, 0.4 last time I checked, around about 45 minutes ago. I would expect us to bounce back a little bit. That was a bit of carnage yesterday, and probably a bit of an overreaction. And we closed at probably peak weakness across indices across the globe. So I probably would expect us to pull back. I don't know, maybe just under 1% potentially, if there continues to be some strength in the futures in the US. Don't particularly see any significant move today or tomorrow. We will have everyone's going to be on hold for that payrolls, and everyone's also watching this Trump tariff legalities as well. So there's a lot going on. I still recommend a trim for general portfolios, but you've got a little bit of time and breathing space. Don't make the mistake of doing it on the way down if it does go down. So All right, folks, sorry about the long version today. We will have a great day and we will talk again tomorrow. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.